The BIS recently celebrated its 90th anniversary, so now is a good time to look back on its activities. One of these activities is the collection of statistics on international banking, which the BIS has been doing since the 1960s. In the 1950s and 1960s, banks sought to avoid regulations on their domestic funding by doing business from their offices abroad, especially in London. This gave rise to an offshore market, where transactions are in a currency foreign to both borrower and lender. It has accounted for the bulk of international banking ever since, as seen in the blue area of the graph. Since the 1970s, financial liberalization and innovation, such as the use of derivatives to manage risk, have been more important drivers.
Over the decades, banks from different countries have competed for market share, leading to swings in the growth rate of banks' international positions. U.S. banks were dominant in the 1960s and 70s, but Japanese banks drove overall growth in the market in the 1980s, and it was European banks that drove it in the early 2000s. These periods of rapid growth in international banking have, at times, enabled credit booms that led to financial crises. For example, international bank credit surged ahead of the 1982 crisis in Latin America, ahead of the 1997 Asian financial crisis, and ahead of the great financial crisis of 2007 to 2009. More recently, the growth in international banking has been relatively subdued. Losses during the great financial crisis and the regulatory reforms that followed have constrained banks' expansion, and non-bank financial institutions have stepped in as international creditors.